Welcome to another Coffee with Samso, where we talk with ASX companies and CEOs about their strategies and their projects. Today I've got Thor Mining, and we're mixing it up a bit. I have two guests with me. I have Mick Billing and Nicole Warland, and they're going to be talking to us about their swag of projects in South Australia and I think in the USA as well. So Mick, maybe you just give us an intro to yourself and fire away.
Sure, Noel, thank you. Thor started off a long time ago now as a tungsten-focused company and was listed initially in the UK. A little while later it co-listed here in Australia. So for those who don't know, we are a dual-listed entity. Most of our shares trade in London, but we have probably 20-25% also trading here on ASX. Over the years, we have gradually morphed from being almost a 100% tungsten devoted project with our Molly Hill project in the Northern Territory to one that is now more copper focused, particularly in situ recovery or in situ leaching copper focus, along with some gold in Western Australia and yes, some tungsten and uranium in the USA. So we're quite diversified. We've got a bunch of these projects have resource estimates on them, so it's not all about grassroots exploration, although we do have a bit of that, and some of that looks quite exciting.
Yep. I mean, I had a look at your released presentation today. It's really intriguing, right? You've got the copper projects, which with ISR, I guess you're one step away from production. That's what it is, effectively, right?
It is. There's effectively three copper projects, all within about 100 kilometres of one another in South Australia, and one of those at Kapunda. We will this year be doing, through the company that we have invested in, doing the final technical stage of feasibility on the project. Now that's not full commercial feasibility, it's the final technical part of that feasibility work where we pump some solution into the ground, dissolve copper and hopefully some gold, bring it up to surface and then extract that copper and gold in almost a mini pilot plant style process. And after that we'll be launching into full-scale commercial feasibility, and that's pretty exciting for any company and certainly exciting for us as well.
Can you just give us? I've written an article probably a year and a half ago about on in situ recovery. Maybe gives us a feel for what it involves and.
Yeah, happy to. In situ recovery is probably the cheapest way of getting metal out of the ground that you can think of, and the least environmentally intrusive way of getting metal out of the ground, provided you've got all the ingredients that make it work. And unfortunately, won't work in every deposit, or we'd all be doing it because it is extraordinarily cheap. If you've got ground conditions where you are under the water table to allow flow of fluid through, where the ground is porous or permeable and allows fluid to pass through from a hole you drill here to another hole you drill maybe 25-30 metres away, and then you've got some of the ingredients that you need. The minerals also have to be soluble, so it's not all minerals. It's normally in the case of copper, it's the oxidised portion near surface that is more likely to be dissolved compared with the primary mineralisation of chalcopyrite, etc. You see in the deeper, more commonly mined copper projects around the world. But if you've got those oxide minerals, you've got porous or permeable ground conditions, you're under the water table, and a few geological controls that mean you can control the process, you're a candidate for in situ recovery. So you drill a hole in the ground, you drill another couple of holes close by, you pump a solution into the ground that will dissolve the copper, and 25, 15 metres away, depending on the conditions that you require for that deposit, you will pump up dissolved metal. And once you've got dissolved metal on the ground, it's very easy with solvent extraction or ion exchange to precipitate that out into saleable form. Some people use sulfuric acid, and sulfuric acid is used in situ recovery of probably 50% of the world's uranium, and is used in a couple of ISR copper projects in Arizona at Florence and Gunnison. At Kapunda, we're using a thiosulfate product developed by the CSIRO specifically for this task, and that one works very well because we're not trying to change the acidity of the groundwater and the ground conditions to dissolve the copper and the gold. It works with that with the pH of that deposit. As a result of which, we won't have to use very much of it, and we won't be creating an environmental problem with what we put into the ground.
Yeah, I guess, when I did the research on ISR, that was one of the issues. Is some of these projects around the world do create an issue environmentally. Go ahead.
Yeah, and that's the reason why the people we are working with at Kapunda and also with our other copper projects over at Alford, East and Alford West, where we probably won't use thiosulfate, we'll use another product, but again, one that works with the conditions. Acid's expensive. It has issues associated with transporting it and storing it. Use it if you have to, but if you don't have to, if you can use something more benign, well, let's do that. The other thing about ISR is that you don't have to dig a dirty great hole. You don't have to have a waste dump. You don't have to have a tailings dam. You don't have lots and lots of heavy grinding and crushing equipment to do the job. Most of the work is done underground. All you see on top of the ground are a few wellheads and some pipes running to a shed where the rest of the process happens. A couple of our projects are on quite valuable farming land, and it's quite possible that while we are extracting copper and hopefully a bit of gold out of those projects at Alford East and Alford West, that the farmers will be able to continue farming right alongside of where we are, and at the end of the life of the mining operation, they'll be able to continue farming on that ground as if we'd never been there. That's a very elegant way to extract copper without disturbing the environment and without rendering that land unsuitable for other uses.
It's interesting because the latest three-letter word is ESG, right? Everything needs to be green and everything else. And this would you see this as part of that sort of sphere?
Well, I guess you do know. One is you're producing copper, and copper is essential for this new life that we're in with where we burn fewer fossil fuels, because copper is an essential part of any motor car now that has that is electric or hybrid has about 4 times as much copper in it as a motor car that has that's driven by internal combustion. Running the hybrid power regeneration systems, they all require more copper. The use of copper is going up now.
All-time high price as well now.
Pardon?
Yes, definitely.
Well, and the copper price has gone up very nicely. In addition, if we're not burning an awful lot of diesel in mining, and you're consuming an awful lot of power in turning over a grinding circuit and crushing, we'll have a lower carbon footprint in our activity than if we were mining by a conventional method. It's good. Now, with these copper investments, we've got direct and indirect now equity in over 400,000 tonnes of copper in the ground. The current price of almost $8,500 US a tonne you multiply one by the other. That's a
big number.
That's a big number nowadays. Now, you don't get it out of the ground for nothing, obviously, but you will get it out of the ground far cheaper than if you were trying to mine this by conventional means.
I mean, I've got a fair interest in copper, and we've had previous conversation, Coffee with Samso. That was the question I was leading to now. It sounds like the process doable, and it's going to be cheap and clean, and we get that. The resource that you have, are we going to get to be able to do the ISR on these, is the question?
Look, the technical issues associated with the first of those is at Kapunda are almost completely ticked off. There's a couple of final steps to go, and they are very important final steps. But but technically, there's no reason why we can't do this. Because we are working in very close to the local town of Kapunda, we have to work with the local community, and we have to do that right. Because if we don't bring the community along with us, our chances of doing what we want to do aren't good. But so far, that community is very supportive. The team working on the project have devoted a lot of time and quality time to ensuring that the people in the town understand what's going on, how it's going to work, and feel part of it. It is a town with a mining history. They're quite proud of it, and you will always find in any community there are a group of people who think it's great, a group of people who aren't so sure, and a couple who really don't want it at all. That never changes in any community, but in general, the community there are quite positive, and we're very pleased with that. Yes, I'm very confident this is doable. We haven't completed feasibility work, and that obviously has to happen, but I would venture to suggest that by the end of this year, we'll be very close to be able to make a decision to say, let's go ahead. Okay.
I mean, look, we could talk about this all day, but I'm actually really interested in what you've got, because the spread of projects is intriguing, of which, the new crash phase now is that, uranium's sticking its head out, and tungsten made some news a few months ago. But you've got some gold projects. Maybe we touch on that before we go into the more juicier stuff there.
Yeah, sure. And we've got some really exciting stuff in the Pilbara right here in Western Australia. And perhaps Nicole, if you could talk a bit about that, because
so our Pilbara project, Ragged Range as we call it, is on the eastern side of the Pilbara in the granite greenstone terrain. It's unlike the copper, it's an early stage, so it's greenfield play. However, the results to date are very encouraging, some really good stream sediment samples. We're also in a really good jurisdiction. We've got some large-scale gold deposits in close vicinity, De Grey's, Hemi, as well as Calidus's Warrawoona group. We've got the favourable geology as well as structural setting. So it's looking good. So we've done 3 rounds of stream sediment sampling, and each of those we've come back with more than anomalous results. Our third program, we came back with up to 2.2 grams per tonne gold. Just to give some background, anything above 5 ppb would be anomalous. So to get something around 2,000 ppb, you're pretty excited.
Yeah.
So we're at that stage now that it's defining a 13-kilometre strike length, this anomalous gold, and so we then went and did some geophysics. This has helped us interpret the structures as well as the lithologies. We now know that the gold sits or is associated with a 13-kilometre thrust faulted contact between the Euro-basalts and the ultramafics. So we're now planning to go back and do some follow-up around these high elevated gold clusters.
Nicole, you're the exploration manager, so you're the technical brains of the company.
Not just technical, no.
Look, to me, the Pilbara was always, I remember, a wise man told me, almost 15 years ago, mate, don't go to the Pilbara, there's lots of smoke, but no one has found the source. But over the last few years, we've seen it, and a lot of activity's been happening, and through my own research, again, over the last just 12 to 18 months, there seems to be a lot more gold there than I had been led to believe previously. And the understanding is getting better structurally and things like that. From your point of view, obviously, you guys are just starting out and looking at Sting, and you said that your interpretation of things. Do you agree or disagree with that statement 15 years ago that, there's lots of smoke, but no one's found a source?
Look, I think you're right. I think it's there's been a lot of coarse-grained gold, so conglomerate-style gold. But I think now, with understanding the greenstone belts and the key structural controls, we're now finding the deeper sources. So that's such as the two larger scale deposits I sort of mentioned.
Yep.
And so now we understand what sort of geology we're looking for. So we're looking for the mafic rocks, the Warrawoona group, so the Euro basalts, and also looking for deep structures. So I think now we understand it a bit more. Yes, the old timers walked across the ground, they were just looking for coarse grain gold, so nuggety style gold, really want fine grain gold.
I think with De Grey, and then you got Kairos and also Calidus with those big massive projects. That may it's in, and plus the whole sort of the Australian craton is mixed with mineralisation. It's very hard to believe that in such a massive place that you've only got 4 or 5 deposits, but what Pilbara is one of my sort of new frontiers I like.
It's underexplored, so our tenements really hadn't had much work done on them. There's new tenements to the northeast that we picked up do have some historic copper and gold workings, but the rest of the area hadn't been explored. So yes, someone's probably walked over the ground, but there's no drilling, very little stream sediment or soil sampling done on the area. Okay. So I think now, with people more focused on the Pilbara, we're obviously getting on the ground and doing a lot more work. Yeah. And so there'll be more discoveries to be found.
I think it's fair to say that the Pilbara has had a lot more exploration work in the last 3 or 4 years than it has in the previous 100 years, yeah. with the gold and precious metals focus. Now, I'm not saying that in the Yilgarn and around Kalgoorlie and Southern Cross and places like that, they are overexplored by any measure, because people are still finding deposits there. But by comparison, there is a lot more work going on now in the Pilbara than ever has, and some of those people, explorers, including us, are very encouraged by that. There's going to be a lot more work in the Pilbara, and a lot of money and a lot of drill holes put into the Pilbara in the next 5 years, and the discoveries will come. Hopefully, we're part of one of those.
I guess with a story like this, a lot of the viewers out there don't realise that the last 12 months has been actually unique in our sector in terms of how easy it is for us to get funding and the amount of enthusiasm into this industry, and that's led to a lot of discoveries with a lot of companies. And it's come to a point now where those with the assets, those with the properties, can actually use the money. If you've got money, you've got no properties, you can't do anything. And I think that's quite exciting for companies, because you are now able to get on the ground and do the work, and then you've promised all the discoveries, but you never had the funding to. Going forward, some of your other projects, which really is the one that's sort of market that likes or starting to rear its head, like uranium. I'm told you're the uranium expert. Can you share with us, what your projects are like?
So we've got a project in Colorado and Utah in the Uravan Mineral Belt. It's a historic uranium district, uranium and vanadium, and essentially we've got due diligence, we've got 1.5% uranium up to 3.5% vanadium. So we've designed a drilling program for May, so we'll go in there and test that. The areas we're drilling some of it have never been tested, so there's no drill holes, and others are along strike. So it's sort of a strategic drilling program to sort of investigate, explore some of these new areas, as well as follow up some of the old areas. It's very high grade uranium, so it's carnotite deposit in sandstone.
Okay. In terms of the uranium industry, I mean, you hear lots and pieces. I mean, you guys probably in the forefront because obviously you've got a uranium project. What are you hearing about the pricing? I mean, we had the RIU conference and the guys talking about how there's going to be a change, a rise in pricing to come. What's your thoughts?
I think there is, Noel. The price of uranium has plateaued in the last couple of years in the just under $30 US a pound. At some stage or other, I believe that will change. There are a bunch more nuclear power reactors being built. I think there's about 50 of them under construction around the world. There's a whole bunch of others on the drawing board, but there's always a bunch on the drawing board, and whether they and you worry about them when they start building them, really. But the US government in particular, and this is where our projects are in the US, has developed a program to become more self-sufficient in uranium supply for their nuclear power generation program. They have put up a fund of $150 million US to acquire a stockpile, and they would like as much of that to come from local sources as possible.
I was just going to say they import 95% of their uranium,
Yeah.
so it's a security sort of issue for them, and that's where having a local source of uranium is what they're looking for. So and also obviously that Joe Biden and the green carbon-free sort of quota that they're looking for, uranium or nuclear power is the way that they're sort of heading in order to get that quota.
Because they've been talking about this. I mean, again, I always say, the experts been talking about the shortage of uranium and the security issue, the critical elements, as you're probably well aware with your tungsten and things like that. But nothing's really been done about it, but only recently we're hearing something.
Yeah, I think you're right. I think the price hasn't moved, and producers and investors have said, well, will it ever move? But one thing I do know is when they do start to move, they will move quite quickly in the price.
Yeah.
So I'm not going to predict what the price will become or when it will start to move, but don't be surprised over the next year or two if all of a sudden we're looking back and saying, at the start of 2021, the price of uranium was about $29, $30 a pound. Look at where we are now and how good is this? Because I'm quite confident it will get there. The fundamentals for the industry are such that they're heading for a shortage of supply in the next year or two, and for that and to fix that, the price is going to have to move up.
Yeah, I think that's what a lot of the commentaries are saying, is what you've just expressed, is that when they move, it's going to move so quickly that if you're not there already, you've missed the boat. And then those that have already have the ground would take advantage of the rise, I guess, shareholder value and things like that. And I do feel that the players in the US, that's why I looked at your stuff, and you've got the tungsten in the US and you've got this in the US. I think that's where it's going to be first off the cap, and then the rest, will come. Would you agree with that sentiment?
Well, we hope so, Noel. There's in the case of uranium, there is production in various parts around the world, and the US gets a lot of its supply from Canada, a lot from Uzbekistan and Kazakhstan, and some from Australia, but virtually none of their own supply. In the case of tungsten, as you mentioned, the US Department of the Interior classifies tungsten as a critical mineral. It has defence applications. It is also a product or a metal that cannot be substituted for many of its applications in just normal industrial use. The US has zero domestic production of primary production of tungsten. They have produced a little bit by recycling of scrap, and that's a good thing to do. But the rest they get from other parts of the world. Now, the biggest producer of tungsten around the globe, by a long, long margin, is China. China produces about 75% of the world's tungsten.
Tungsten products. And concentrates.
But most of it, not all of it, but most of it from mines in China. They have 2/3 of the world's tungsten reserves. It's commonly acknowledged. Now, the western part of the US has dozens and dozens of tungsten deposits. Some of them not very well explored. Some of them have had a history of production, but quite historic. The largest tungsten deposit in the USA that's declarable under JORC or 43101 standards is Pilot Mountain. And that deposit or that project is owned 100% by Thor Mining. Yeah. If the US really becomes serious about domestic source of this critical mineral tungsten, one would think the first place they would look is at the largest deposit that they know about, that they have. Now, there may be larger deposits there in the US, but nobody else has done the work on the other deposits to see whether they are as big as this cup of coffee or if they're monsters. The only one that's of any real size that has had that work done on it is Pilot Mountain that we own.
I mean, tungsten is again, like diamonds, one of my pet commodities, because the industry is so unique. They only use about 100,000 tonnes of this material, and if you're producing 1,000 tonnes or 2,000 tonnes a year, that's a big number, and it's higher value. Obviously, the price is a bit depressed, but somewhere along the line, when that moves, a bit like your uranium story, then it just runs, right?
It does. Tungsten has just started to edge up in the last few weeks. And our project we have a tungsten project at Molly Hill in the Territory, as well as Pilot Mountain in Nevada. Now, I guess tungsten was really belted price-wise at the start of this COVID crisis that we encountered just on a year ago, and the price of tungsten went down. It's just started to come back up. Tungsten is essentially a metal that is used and grows as economies develop and people get involved in construction and development and global growth. Now, as we come out of COVID, governments and industry in general is going to be throwing a lot of money at development, global growth, and which will encourage global growth and will really boost the demand for products like tungsten. Others as well, of course. I'm very positive about lots of metal prices over the next couple of years for that very reason. But tungsten's no exception to that. In fact, tungsten, when it does move, moves much faster than the others. So at some stage or other, history has said when tungsten moves, it moves very, very quickly, and it can double in price very quickly. Now, how long it stays up for, that's a $64 question, obviously. But we have a couple of projects that are, in our view, poised to take advantage of that when that price does move.
I mean, one of the, for me anyway, an indicator, because tungsten pricing is a bit sort of iron curtain kind of thing, but one of the indicators I looked at and I used to look at was tin. Now, tin's really running really hot. I mean, it's probably much hotter than before, and tungsten always follows that lead, so in that sense, I do think that there is activity coming in, and you can hear it with the uraniums as well, and Dr. Copper's always right. Dr. Copper's running and everyone must be having a party, so so it comes back to when I looked at Thor and your portfolio stuff, and my first impression was that you got a lot of projects, a bit messy, but when I started going through it, I just sort of see a logic in the sense, your copper and gold, like your ISR thing could be quick production while the thing's running. Copper pricing is good, so it allows a lot of this kind of process to get in play. A strategic play in the Pilbara, which is nice in that sense, but then you got your uranium and your tantalum. Molly Hills, I mean, look at the grade at Molly Hills is good, and your Pilot Mountain one, that's a good grade in any tungsten project. How do you think that you can monetize these kind of things?
Good question, Noel. I think if we talk about our copper investments for a start, because we've got to start somewhere, and they're probably my favourite right now. These projects are able to be brought into production at a relatively modest cost. So we would like to think that we can finance through debt, etc., perhaps forward sales, the development of those copper projects ourselves, and start producing copper and become copper producers in our own right. And that's a strong aim that we have. The gold projects, well, time will tell. With that one, we'll be drilling that in April, May. Yeah. And that will, and the results of that mean that project will hopefully have a life of its own, and that's a good thing. The tungsten and the uranium projects, to the tungsten projects in particular, we need investors or debt providers who are prepared to take a long-term view of the commodity cycle with the tungsten projects, because they are difficult to hedge and sell forward, so financing of them is a little more challenging, although there are some facilities now because of the fact that they are strategic commodities, where governments around the world are starting to pour a bit of debt and put a bit of debt money into funding certain of these projects, and we're working away quietly at that. The uranium projects, again, we'll do this first drilling program. After that, we might look for a strategic partner to help that take that from where it is to where it deserves to be. Mm-hmm. I think we probably won't be doing 100% of all of these 100% of the time going forward. It's and the US projects are those where we would at some stage look for a strategic partner who wants to be part of that, to do some of the heavy lifting and take that forward in partnership with us.
Mm. I mean, to me, it's a classic. I mean, this is a good market to have a series of projects which you could get Big Brother or someone else to take that while you have a free carried interest. I mean, assets, it's hard to come by. Good assets are very hard to come by. And I think that's a play that works very well in our sector. Obviously, it doesn't work so well when the market's a bit depressed, but everything seems to be lifting. Nickel's running, copper's running, gold's running, and then uranium and potentially tungsten. So when I saw it, it made quite good sense, and they're solid projects, you know.
I think the other thing that will, certainly from an exploration point of view, is you can have projects, you know, a pipeline of activities. So while we're doing some of the Kapunda research work, we can then be drilling in a Ragged Range project. While we're in the US drilling, we can be doing, so you can sort of have a continuous pipeline of activities and news flow and keep things progressing.
Yeah, well, that's very important. I mean, that's one of the key aspects of our sector, right? It's news flow, and when you have, and you're right, you know, you can't be doing everything in one go. And now one of the biggest issue in the market now is SA is coming back, and there's a 6 weeks turnarounds, yeah. and there's no news flow where while you're waiting for that, you could be doing something else.
Exactly.
I think that's where this multi-project comes into good play, you know.
Yeah.
It does, and that requires funding, because if you're always working on, if you've got half a dozen projects, or in our case 4 or 5 projects, and you're trying to do all of them, you need a budget for that, and we are currently quite well funded, and the stuff we've got coming up is we are able to do with our existing reserves, so that's a good place to be. But if we come across a couple of great intersections when we drill Ragged Range in a couple of months' time,
fingers crossed,
and that's obviously the objective, well, we'll want to do a lot of drilling very quickly to follow that up.
Yeah, that's the thing about having some projects in a significant position, right? Like you said, one drill hole changes the whole thing, right?
Yes.
And there's also another saying, don't drill a perfectly good project.
Well, there is a truth machine sometimes gives you an answer you don't want.
Yeah, that's right.
But you can't dance around it forever. Sooner or later, you must drill it.
Correct. Look, guys, going forward for you guys, what is the 12-month, 18-month? What's that path for you guys? What would investors be looking out for?
Well, as I mentioned earlier, is the news flow, so the activities. So in Ragged Range, we've got a GChem program coming up in the next week or so, and then following on with a drilling program, particularly at our Stirling prospect. Over in our copper projects in South Australia, so Mick talked about Kapunda and where it's at with its SELT testing, but over in our Alfred East project, we're sort of starting off that project and starting off on some of the hydrogeology work. So that's sort of starting in the next few months. And then over in the US, we've got our drilling program scheduled for May. So there's quite a busy first 6 months of this year.
Okay.
And then, as we mentioned, based on those results, things may change.
Yeah.
And priorities may change.
Yeah.
Yeah.
Look, guys, thank you. I mean, it's a fantastic story, in my opinion, from a technical point of view, from an exploration point of view. As I quote Alan Kelly, when you look at something, goes, well, that's interesting. For an exploration geologist, like, it means a big thing, But look, guys, thanks for your time. I love the story. Love to keep following the story. I think it's great. Any last words to get those eager beaver investors into the stock?
Have a look at our website, www.thormining.com. There's the latest presentations there. I honestly believe it's well worth looking at.
Yep, great. Thank you.
Thank you.
Thanks very much.
All right.